Welcome back, and we are now seeing potential black swan events popping up and repeats from what we saw in 2021 when there was over leverage across the board and chase of the yield. And now we are seeing Galaxy Digital launching Galaxy One platform offering crypto stocks and 8% yields to US users. What does this remind us of? Well, if you guys remember, Celsius, Voyager, 3 Hours Capital, BlockFi, FTX, Terra Luna, they were all promising these very high returns. But the question would be, where did the returns come from? Where did the yield come from? This brings us to over leverage in the market, potential black swans that are popping up, and the market sniffing potential downside as we are approaching and hitting all-time record highs across the board in stocks, in crypto, in gold. This is the Cryptoviser podcast. Don't forget to give this video a free thumbs up. Also hit the subscribe button. That way you never miss a new video. We upload every single day of the year to bring you the latest happening in the financial world. And hopefully in today's video, I will be laying out in a very clear and concise manner just some of the risks that are popping up in the market. And are you too bullish? Am I too bearish? Is this a crypto black swan? Let's get into all of the details and all of the data. Because again, we have been showing data on this channel for months now. And there's now people, as Bitcoin is hitting new record highs barely at $125,000, $130,000, are saying, Cryptoviser, you were wrong, you were wrong, you were wrong. And it's like, guys, I am not trading day to day. I am trading the macro environment, and that is what we're going to be discussing in today's video. Let's get right into the data. So as we've been talking about days since the Bitcoin halving, we are now at historical highs at the 550-day mark, which basically was the top of the market back in 2021 and also 2017. There's a lot of people who think that there's no more 4-year cycle. Raoul Pal said that it's now a 5-year cycle. There's people who are saying that it's over. We're never going to have a bear market again, including the likes of Michael Saylor. And meanwhile, we're also seeing, a lot of this kind of thing. $6 billion open door CEO says they're going to enable buying a home using Bitcoin and crypto. Bullish. Guys, who cares? This is not bullish. Like, I'm seeing so many things like people are posting. Michael Saylor said that the Bitcoin is going to hit $1 million. You know, CZ said the Bitcoin bull run hasn't even started. It's like, guys, this is not even based on any data. Because the actual data shows us that, number one, the Bitcoin maximalists who are saying that being able to buy a home with Bitcoin is bullish. Number one, this has already been going on. You could have already bought your home with Bitcoin. Number two, I thought bulls say never sell your Bitcoin for any reason. So who's actually doing this? And by the way, nobody's really buying or selling homes with Bitcoin. It's like maybe a handful of people worldwide that are actually doing this. And so this is not bullish, but this is, in my view, is potential indicators and going into some of the data that we're going to be talking about. We're also seeing Ansem, who is a well-known Solana maximalist, and you guys can see his profile thing right there, the cold breathing. He said, they missed the bottom. They FOMO'd the top with leverage. They drank the dollar going to zero Kool-Aid and never sold. And this is in response to another tweet that says, y'all must never forget the fact that even though 2017 Q4 and 2021 Q4 were the most lucrative quarters, 99% of people lost money. So what mistakes do you think they made? Well, in those two cycles, yes, 2017 Q4, 2021 Q4 was the most bullish. You could even potentially say, because Bitcoin is hitting new all-time record highs in Q4 of 2025, that this is the most bullish quarter. But guys, that's if you bought last year. That's if you bought the year before that. That's if you bought the year before that. That's not if you're buying now. And what are we seeing happening now in Q4 of 2025? We're seeing people buying with leverage, not even just buying Bitcoin with leverage, buying Bitcoin levered products with leverage. And I'm going to break that down right now. But before we get to that, Citibank is now introducing their 12-month price targets for digital assets. Now, right, in Q4 of 2025, they're producing these price targets. So the bear case, again, this is over the next year, okay? So from 2025 into 2026. Their bear case for Bitcoin is $82,000. That's kind of where I think that we're going to be landing, maybe even lower than that. The base case is 181,000 and the bull case is 231,000. So this is what Citibank is putting out for the next 12 months at the end stages of the bull market, at the 18 months after the Bitcoin halving cycle, after historically we're going to be going down for a period of time before we go back up. And they're posting all of these bullish projections. And people are eating it up. They're like, wow, I got to go lever up. I got to go double down. I got to go buy on margin. I got to go arb trade. And again, this brings us to where we started the video. Galaxy Digital is launching Galaxy One platform offering crypto stocks an 8% yield to US users. Now, just to remind you guys, this is from 2021 or 2022. Celsius's 18% yield on crypto are tempting, but drawing scrutiny. And where was the yield coming from? It was coming from you. That's what happened in 2021, right? All of these products, everyone was chasing yield. And it wasn't even that big of yield, right? 18%, it was basically double the rest of the industry. But what was actually going on? There was over leverage. All of the crypto companies were over levered. They needed to borrow more. Why did they need to borrow more? Well, they were starting to lose customer funds. And so you levering up, you're not playing with, well, you're your own customer, I guess. And so you are playing with your own money. But by buying on margin or yield or looking for these yield generating products, this is risky. And this is exactly what happened in the previous cycle. And so my question is, where is Galaxy getting the yield from? Well, let's learn a little bit more. Galaxy Digital rolled out Galaxy One in October, a new customer platform and app that combines 4% cash accounts. This is fairly normal for high yield savings accounts or high yield checking accounts. Crypto custody and trading and zero commission trading on US equities and ETFs. At launch, users across the US who meet KYC requirements will be able to buy, hold, and transfer Bitcoin, Ether, Solana, and Paxos Gold. A Galaxy spokesperson said that the company plans to scale the platform to include more tokens in the future. So basically, they're just becoming a crypto exchange, and this is the biggest thing that ever happened. It's not. But anyway, the platform is also offering Galaxy Premium Yield, a high-income investment note offering 8% yield, but only to accredited investors. Why do you think that is? Because there's so much risk here, and they don't want the everyday person to be risking their money. And also, these accredited investors, if they lose money, they understand, right? Like, they may sue, but they still understand, like, there's risk involved. Where the everyday investor, they're not going to. They're gonna remortgage their house. They're gonna go on margin. And by the way, guys, we're already seeing this. I'm about to show you a few examples, but before I show you, well, let's just start there. Jim Osman posted this on X. Now, it's in response to this user who basically posted, it says, my actual high yield ETF portfolio is 14 funds paying me over $27,000 a month in dividends. Here is the full breakdown. And in the breakdown, you can actually see how it's all broken down, how they're holding it, and all of that. Now, Jim Osman, who's a well-known market expert, 41,000 followers on X, said someone bragging about making $28,000 a month on $300,000 portfolio. That's about a 10% per month yield, not per year like Galaxy is providing, right? This is per month. Now, we've talked about these high yield ETFs and high yield products like Yield Max ETFs and the similar type of ETFs, but these are very risky, okay? We've been in a bull market. We've had the bull market. In the bull market, yes, they're going to keep paying because the prices are going to keep going up. But once the reverses, pay attention. He says someone bragging about making $28,000 a month on $300,000 portfolio while holding $200,000 on margin isn't an investor. They're a margin call waiting to happen. That's 3-to-1 leverage. A 33% drawdown wipes you out. No high yield ETF pays 100% unless it's returning your own money. What looks like dividends is often just return of capital, your cash recycled to make the payout look high, while the fund's net assets quietly bleed. Real yield survives market stress, leverage yield doesn't. If you need to borrow $200,000 to make a portfolio look rich, you're not collecting income. You're renting it from the broker. Risk isn't bad, pretending its income is. Now, again, if you don't really fully understand this or you're in margin, you need to probably rewind the video and just re-listen to this part. Yield max does pay very high returns, but if you look at the actual product itself and the price of the yield max ETFs, most of them have significant NAV erosion, significant reduction in the price of the like look at MSTY, which is it's an ETF where they basically do covered calls. It's covered call strategy type situation. We've talked about MSTY quite a bit. And even though MSTY is paying like basically 100% per year, if you look at the last year on this chart, the price of this ETF has come down 65 to 70%. So you're basically making 65 to 70%, but you're also losing it in the price of the actual ETF. Now people are like, well, that's okay because after a while, I'll make more money than what I lost, which may be true, but you also have to count in taxes. In the US, these ETFs, the dividends that you're getting are taxed as normal income. So depending on where you're living in the United States, that's anywhere from 30 to 50%. And so if you're losing 60% and then you're getting 60%, but then you're getting taxed on that, you're really only making 30%, but you're losing 60%. So how does that work out? And by the way, again, to Jim Osman's point, if you're doing this on leverage in margin, it's even more risky because you could just get margin called out in the event of a black swan, in the event of the market turnaround. Nobody is admitting that we're at the top of the market. Nobody is admitting, oh, Cryptoviser, you're wrong. You see, we just hit new all-time record highs. And I'm like, guys, you're missing the point. I said when I called the top in June and July at about $110,000, I said we can go up to $150,000, but the difference between $110,000 and $150,000 is not that big of a difference when the downside risk is so grand. Because if you don't think that we're at the top at $125,000, you're not going to think that we're at the top at $150,000. You're not going to think that we're at the top at $175,000. And so if we hit those numbers, you're just going to get even more bullish and you're going to double down. You're going to take out more leverage, more debt, more margin. And that is how people get screwed. This is what I've been saying for the whole year now, is that by this time next year, there's going to be people who are millionaires now in their portfolio. They're going to have negative. They're going to be negative. Like, how are you negative? Well, there will be because they're going to overtrade the market. This is how Celsius went down, how Voyager went down, 3 Arrows Capital, Terra Luna, BlockFi, FTX. They all were over doubling down, trading customer funds, didn't see the downside risk, and they just kept doubling down, and then they lost everything. And so this is what we're also starting to see because Robinhood now is listing the MicroStrategy debt or convertible debt notes, whatever you want to call it, which are Stride, Strike, Stretch, and Strife. Okay. And so Robinhood just listed these. Gladiator, who has 28,000 followers, a lot of MicroStrategy bulls follow this account, said Stretch, as of today, is now available on Robinhood. With only 5.5% margin rate, Robinhood users can now buy Stretch with margin for 10.5% yield, creating 5% arbitrage. Basically saying if you buy Stretch, according to MicroStrategy, you get a little bit over 10% dividend per year. And so what he's saying is you can take out 5% margin on Robinhood, get 10% from Stretch, and then you're basically paying 5%, but you're making 5%, and it's not your money, right? But there's a risk here, and he's not saying any of that. He's not saying any of the risk. Number one, what if Stretch goes down in value? Number two, what if they stop paying the dividend? Three, right here. This user on X said, I received a margin call from Stretch Arbitrage Position because your risk department, saying Robinhood's risk department, bumped the margin requirements from 50% to 100%. Why did you make this change only a few hours after the listing? Stretch is not a volatile stock. This is a preferred share with a $100 pegging target. Well, Rowrider explains it, saying after MicroStrategy shills lured Robinhood suckers into buying Stretch Ponzi on margin for yield arbitrage, like I just showed you what Gladiator said, Robinhood raised the maintenance requirement, wiping them out. The cult is trying to turn Stretch and MicroStrategy into a Terra Luna Ponzi flywheel in desperation, and they're failing. And I would agree. The fact, first of all, guys, you are way more educated. Okay, there's a lot of people who are just reading this from Gladiator, reading this from this other this user who's like, oh wow, I'm making $28,000 a month in dividends, and they're looking at it as, wow, I can do this too. I don't have to work anymore. Wow, I can do this. And yes, you can for a while, but you have to understand the risk, right? Well, what do we talk about on this channel? Very high reward with very low risk. Because the more risk you have, the lower the potential of the reward, especially sustainable. Because once everybody knows, it's not a trade anymore, right? I was trading MicroStrategy years ago when nobody was talking about it. Once the big accounts started picking up MicroStrategy, I got out. They were the exit liquidity. When we were talking about MSTY in 2023, I was heavy in MSTY because there weren't a lot of people in it. Once everybody started getting in it, it's no longer a safe trade. I got out. And that's when people were piling in. And look at what's happened since. It's been NAV eroding, even in a bull market, even as the price of MicroStrategy goes up. And so there are extreme risks here. These are the black swans piling up and piling up and piling up. And a lot of people can't see it. And then we have Josh and Fred. And listen, I think these are very smart investors, right? But they understand the risk. Maybe they're getting lost in the sauce a little bit. They're getting, because people keep saying Cryptoviser, we haven't even hit euphoria phase. No, this is euphoria. This is beyond euphoria, where people are like, oh, Robinhood just listed this, boom, $28,000 a month. Oh, you can get free yield, boom. The reason Robinhood changed the maintenance requirement for this product is because they don't want people taking out the risk here, because they understand the risk. Their customers clearly don't. And like I said, guys, I believe that you should be able to trade however you want, regardless of your education level on the matter, but these platforms don't want to take on the risk for you, because then you're going to blame them when you lose everything. You're going to say, Robinhood, let me do it. Same way they said, oh, well, FTX, let me do it. Voyager, let me do it. Celsius, let me do it. And so this is risky, right? Fred Krueger, well-known investor, Bitcoin maxi, according to his own profile here. It says, MicroStrategy should buy Metaplanet for $6 a share US. And because Metaplanet, even though we're in, Cryptoviser, we're not in a bear market. We're not at the top of the market. Metaplanet, look at their year to date, okay? We're basically where we were in June when I called the top of the market, right? We've done a round trip. People are going to be chasing this high, but I don't think it's going to come back. What is the catalyst that's going to bring us back to this high in Metaplanet? They're buying Bitcoin. Bitcoin's at all-time record highs, and yet Metaplanet's not. But we're not at the top, Cryptoviser, right? Josh said, nope. Metaplanet should buy 1 billion Strife, right? One of these debt products from MicroStrategy, which is above the par. The par is 100. It's at 116, essentially wiping out all the yield that you're going to get on this product, period. I think that this is very high right now because this is the most preferred to the MicroStrategy shares. And I think that the market is pricing in, like I've said, a major reduction in the price of MicroStrategy. And so it's pricing in the risk. But anyway, Josh said Metaplanet should buy 1 billion Strife and 9% yield and use it to create a series of 2 billion, 4.5% Bitcoin backed bonds. First, they sell a 2-year note, and that allows them to buy the Strife and 1 billion worth of Bitcoin. Then they could use the remaining 2-year forward start perpetual to start creating a forward yield curve. 2-year, 3-year forward, 5-year, 5-year forward, 10-year, 10-year forward, all with the same perpetual, just slicing it into forward starting annuities, getting chunks of money for each issue, buying Bitcoin and later funding it with equity issuance once they trade is well in the money. First of all, I have no idea what he's talking about here because this is going back to what Jim Chano says, financial gibberish. This is literally financial gibberish. It's like a flywheel. They're doing what Celsius, Voyager, 3 Hours Capital, Terra, they were all borrowing and lending to each other, all of them. That's why we had a bubble. That's why we had the collapse, because they were all borrowing the same money. Like FTX would loan money to Celsius, then Celsius would loan it out to Voyager, then the Voyager would loan it out to 3 Hours Capital. And they were doing this with customer funds, by the way. And then they were trading the market as we were downward trending into the bull market. And they had to keep doubling down. Nobody on Wall Street is buying the BS. They're just not. This is why Metaplanet is down so significantly. This is why Nakamoto is down so significantly. And we're about to get into Nakamoto in just a minute. But these are the swans in the market that people are not viewing. They're saying, you're just bitter, Cryptoviser, because you sold and this and that. First of all, I don't even talk about my portfolio on this channel really at all, because it doesn't matter what I'm doing in my portfolio. What matters is what the data is showing us. And so there is a lot of risk here, a lot of risk. And as MicroStrategy continues to do well, everybody's blinded by this, right? Because I'm not. In my view, the only MicroStrategy price can go up higher and higher, but we know what they're going to do. They're going to sell shares on the open market. They're not going to stop doing that. And so this is the FTX of the cycle, in my view. I've been saying this all year, because MicroStrategy will outlast all these other companies, even though all these other companies are doing terribly right now. And this brings us to this user who's also posting, do you understand what deploying the stretch ATM means for MicroStrategy? It means MicroStrategy has reached the point of perpetual self-sustainability. There are many Bitcoin treasury companies, but there's only one that has reached or will imminently reach this level of scale and maturity. Don't buy Bitcoin yield or MNAV. Chase performance and operations. Guys, MicroStrategy's performance and operations of just selling shares in the open market will work in a bull market because it has been. But in a bear market, when the sentiment changes, when we are no longer in euphoria, nobody's buying it and nobody's going to have the money to buy it. And people will be doubling down until they have no more money left and they get wiped out. And remember what I say, MicroStrategy is playing a different game than you're playing. You can't afford to lose this money. They don't care. So, yeah. And then you see this, right? JPM Chase is 0.01% yield, Stretch is 10.34% yield, which is riskier. Well, they both have risk assessments, right? Putting your money in JP Morgan, you're not going to make any money, but it's safe. Putting it in Stretch, right now it seems safe. But what happens in a bear market? I mean, they can barely hold onto the $100 par level on all of the products, right? Strike under 100, Stride well under 100, Stretch under 100, Strife is over 100, wiping out the yield. So what's the point in holding it? But the maximalists are not going to say this because they have, I have no allegiance to any, like I'm just an analyst and an investor, right? Like I can get in, and I tell my viewers this all the time, right? What's a better investment, Bitcoin or a home? Well, clearly Bitcoin, because you can get in and out of Bitcoin in a second. A home, you got to list, you got to find a buyer, then you got to get them to close. This could take months, years, potentially. Stocks are liquid. You can do the same thing. But there's risks. There's a lot more risks and a lot more volatility. And so just saying, well, Stretch is a 10% yield, there's no risk. Well, That's what they were saying about Celsius. And all of the crypto YouTubers, not here on this channel, we did not. The only two crypto exchanges we've ever promoted, and it's not even a promotion, I just have affiliate links down below. If you want to sign up for Coinbase or Gemini, use my links down below. You can get free crypto utilizing my link, and it helps out the channel. These are the only two companies I've ever had in the links in the description for affiliates. Because at the end of the day, all of these products were risky. And all of the influencers were saying, sign up for Celsius, get 18% yield. And all of their followers were like, oh, wow, I can get 18% yield. This is way better than JP Morgan, and there's no risk. Well, there was a lot of risk. And some people still didn't get their money back from that. Meanwhile, we have the head of digital asset research of VanEck saying MicroStrategy's president in New York City meeting investors, sounding confident. Well, what do you think? The CEO or the president of a company is not going to sound confident? He says a major takeaway is a major ratings agency is likely to initiate coverage of MicroStrategy perpetual preferred. Those are all those stride, strive, stretch that are in coming quarters, opening the door for insurers and pensions to buy. And a lot of maximalists are like, wow, I got to buy MicroStrategy, got to buy all this. First of all, we were told, oh, it's a lock. MicroStrategy is going to get in the S&P 500. They didn't. We actually are now hearing Bloomberg analyst James Seyfarth saying that it looks like MicroStrategy will be eligible for the S&P 500 inclusion in December. What happened to September? They weren't included. December, nothing changed. The company is still risky. And for us to think that they're going to get included in the S&P 500 or they're going to get a credit rating, who cares? First of all, I don't think they're going to get it this quick. Second of all, pension funds were purchasing and investing in FTX. They weren't investing in Coinbase, Kraken, Gemini. They were investing in FTX. And so just because a pension fund is investing doesn't mean that it's safe. And again, they have a lot more money than you do. But, you know, a lot of people are just saying, Cryptoviser, you're just being a bear, just being a bear. And maybe I am being a bear in the market, right? But at the end of the day, there's risks here. This user says, I don't know, man. This kind of looks desperate. And this is in response to Swan's, which is another Bitcoin treasury company, which, I mean, let's look at the stock here, SQNS. This company also, look, we're lower than where we were last year. And we're at all-time record highs in Bitcoin. Tell me how that works. Tell me how this is bullish. This is telling me Wall Street doesn't buy the BS. But anyway, back to this. Saquon's launching a buyback program, American Depository Share Buyback Program. This user on X said 120,000 followers. I don't know, man, kind of looks desperate. Treasury companies' thesis they sold you was we will use financial engineering to acquire more Bitcoin, when in reality the stock prices keep falling. We can't acquire more Bitcoin, so we're going to try and prop up the stock price with our remaining cash. Yeah, this is an indicator. And I remind you, the company, I think it's called Stride, ASST, they just announced that they're purchasing Semler Scientific, which is another Bitcoin treasury company. And I'm pretty sure we're going to see a lot more acquisitions because they're just going to keep buying up each other. Because the longer they can keep this thing going, the less likely we're going to rotate into that bear market. Or it's just going to prolong until we do. But look at this. Strive is down since the announcement. Since the announcement of buying Semler Scientific, it's down. And Semler Scientific, if we look at the year chart on this, we're lower than we were in the beginning of the year. We're at yearly lows. So people are getting blinded by MicroStrategy and not seeing Nakamoto, Sequence, Semler Scientific, Stride, all of these companies are significantly lower than they have been. I mean, you tell me. And then we have Molly, who has called a lot of things in this Bitcoin treasury space and even in the Bitcoin space in this cycle. She said she just read through Nakamoto's or Kindly MD. We've talked about them quite often. And she said she read through their SEC filings. Nakamoto took out an 8.5% secure digital asset backed loan from 2 Prime, which is, I think, Coinbase, to cash out Yorkville's $200 million convertible bond. They paid them back $200 million plus 1.5%, even though their original SEC filing had the note at 0% with a $2.80 convert price. She said, in her opinion, this is a terrible move. Number one, it puts Nakamoto's Bitcoin holdings at risk. If they default, 2 Prime can seize their assets. And number two, the high cost of capital. Swapping a 0% convertible bond with an 8.5% interest debt is a steep jump in cost. I mean, literally from 0 to 8.5%. The balance sheet stress is servicing 8.5% on $200 million is $17 million yearly interest expenses and high operational costs and negative cash flow for underlying business because Nakamoto doesn't make any money. MicroStrategy doesn't make any money. They think that Wall Street and you are stupid. They're saying, I mean, MicroStrategy in their September filings, they said they made $30 billion or $10 billion. They didn't make anything. Unrealized capital gains, they don't make anything, $0. And so all of these other companies, it's the same thing. You can financial gibberish or financial alchemy everything and say, oh, well, technically we made billions of dollars by buying more Bitcoin. But if you're not selling the Bitcoin, you're not making anything. And then in the bear market, what are you going to say? You're down $50 billion? How do you think that's going to impact the prices of these stocks? But according to the bulls, we're never going to have a bear market again. We're never going to have a 4-year cycle again, even though we're literally in it. We're literally in it. And the market is saying bullshit. The bulls are saying bullish, but the market is saying bullshit. She also says the lack of equity premium and investor confidence. If a company can't raise cheap converts off its Bitcoin balance sheet, it's a red flag. The black swan, as we say. The key test for a real Bitcoin play is whether they can issue near zero interest convertibles at a premium conversion rate. That signals actual demand from a fixed income investor. If there's demand only suggests this stock is only a pure speculative play and the stock is just a music chair game. And this whole musical chair game, guys, going back to the previous cycle, it was Celsius and Voyager and 3 Hours Capital. This time it's the treasury companies. They're all buying Bitcoin to pump the price of Bitcoin up. But what happens when they can't raise any more money, right? Because like most of the investors here are like very, very amateur investors. They don't even realize, like Kindly MD, this is their own filing from September. And you can see all the early investors that got their shares unlocked. I mean, millions and millions and millions of shares unlocked. And most of them have been selling these shares. And this is why the Nakamoto price keeps going down. It's lower than it was before they even announced that they were buying Bitcoin. Before they purchased their first Bitcoin, the price of the stock was higher than it is today. And it's trending lower. And there's only so much more we can go. I mean, people are like, oh, Cryptoviser, it won't go to zero. I would not say that. Core Scientific in the previous bear market in 2023 or 2022, Core Scientific went to 5 cents. 5 cents. Kindly can go to 5 cents, maybe a penny. Will it be purchasable at that point, like investable? I don't know if as an investment. I think as a pure risk trade, I would probably, if it went under 10 cents, I would probably buy, because the likelihood that it would get bought up would be very, very high. But there's still risk there, and I don't think that people are fully seeing it. Right. And again, the CEO of Kindly, of Nakamoto, confirmed that these early investors are selling. He said in typical mid-cap pipe transactions, 50 to 70% of shares are liquidated within the first 2 weeks, meaning when these unlocks happen, 50 to 70% are sold as soon as they're unlocked. He said, I've been monitoring the progress every morning, and I think this jives almost through it. He said that at the mid-September, ends of September. Now we're in October, middle of October, and it's been straight down. Literally, you can see right here from when they unlocked the shares until now, 90% drop, 90% drop. And I don't even think it's all sold. Okay. So what happens from there? Predator said Nakamoto is down 95% since this video. Again, June of 2025, when I called the top of the market, this was euphoria, where they're saying, let's go Nakamoto. They have Gary Cardone here. They're convincing him to buy Nakamoto, right? He said he's going to buy it. He owns it. Everybody's happy. Everyone's cheering it on. But he was the exit liquidity. Let's watch this video.
All right, Naka Nation, let's go. Nakamoto, Naka's the ticker.
I think I'm going to buy another share tonight.
Oh, are you buying a share? Are you buying a share?
I'm buying 100.
We got Gary to buy 100 shares.
I'm 4
I
shares.
already have a couple.
Gary, check it out, dude. Yeah. I'm 4 shares in, bro. I'm going to go. I'm going crazy. I'm going to match. I'm going to buy another 4 shares tonight. I'm buying another 4 shares tonight. Okay.
I'll buy 4.
Oh, you.
Now, obviously, they're joking about buying 4 because these guys probably had quite a lot more. Actually, let's look at this and see if Cardone is here, listed here. No, so he wasn't an early investor, at least not under the name. But guys, that is euphoria. That is peak euphoria. That was months ago. Everything after that was just volatility, and volatility down to the downside. So where are we? Even with the Ethereum treasury companies, most of them have not been buying. We're in the second weekend of October. No purchases in October. Even September, BitMine was the only one that was purchasing. So, in my view, there are a lot of black swans emerging. Some of them are already playing out. And I think that we're going to see a lot more. But again, based on the historical context of where we are and where we were in 2021, where we were in 2017, we are at the end stages of the cycle. Let me know what you guys think about this thesis. Let me know what you guys think about the black swans. And are people getting too bullish in the market? Let me know down below in the comments. And as always, don't forget to give the video a free thumbs up. Hit that subscribe button. Let me know what you think in the comments down below. And I'll see you on the next video. As always, Crypto On.